Today, we're traveling to China to talk about BYD. Build your dreams. Once a humble battery maker, it's now one of the world's biggest electric vehicle producers and Tesla's toughest rival. But behind the hype, is BYD really driving toward a sustainable future? Or heading straight into traffic? Let's find out together. BYD designs and manufactures electric cars, buses, trucks, and batteries. Basically, everything that moves or stores energy. The company operates in over 70 countries and has grown fast, supported by strong Chinese demand and vertical integration. That means BYD controls almost every step of its production, from the battery cell to the car's final assembly. It's like if Apple built not only the iPhone, but also mined the lithium for it. Efficiency level, maximum. BYD splits its business into 4 key areas. Automotive, which dominates revenue with electric cars and hybrids. Battery and energy storage, powering both its vehicles and external clients. Electronics, building components for other tech companies. And monorail systems, a futuristic bet under the Skyrail brand. That mix gives BYD flexibility. Cars for today, clean energy and transport infrastructure for tomorrow. Over the last 5 years, BYD's stock has been a roller coaster. Sharp growth, sharp corrections. But zoom out, and you'll see a clear trend. Consistent expansion in revenue and global footprint. It's volatile, yes, but so is the EV industry itself. High risk, high voltage. Revenue exploded, crossing $80 billion United States dollars in 2024, nearly tripling in just a few years. That's thanks to booming EV demand in China and BYD's ability to scale fast. Few automakers can grow this quickly without breaking something. So far, BYD's engine seems solid. Profits have also surged, from just $1 billion a few years ago to over $5 billion United States dollars today. Impressive, though margins remain tight. In short, BYD makes a lot, sells a lot, but still fights hard to keep profitability high in a hyper-competitive market. Free cash flow has improved massively, showing BYD can now fund expansion without drowning in debt. That's usually the moment long-term investors start paying attention. Operating margins are modest, around 5 to 6%, which might sound small. But remember, this is a car industry where anything above 10% is luxury. BYD's efficiency and in-house production help it stay profitable, even in price wars. EPS has been climbing steadily for a decade. BYD's consistent reinvestment in R&D, batteries, and global expansion shows real strategic discipline. It's playing the long game, not chasing quarterly headlines. The stock trades around 25 to 30 times earnings. Not cheap, but for a fast-growing EV leader, that's reasonable. Think of it as paying a little extra for a front-row seat to the future of mobility. The dividend is symbolic, small, but it exists. The company prefers to reinvest in growth. And honestly, that's a smart move at this stage. It's like giving up dessert now for a bigger feast later. BYD's debt has stayed moderate relative to its assets and cash flow. For a manufacturing powerhouse scaling at this speed, that's a very healthy sign. The balance sheet shows solid management, disciplined, not reckless. Analysts remain cautiously optimistic. Most rate BYD a buy or hold, citing its technological edge and strong local dominance. The only real question is how much of that success can be exported, and whether Western markets will open their doors or raise tariffs. It designs batteries, chips, and vehicles in-house, a massive advantage when supply chains get messy. Add China's EV policies and BYD's ability to expand abroad, and you get a rare combo: growth plus resilience. But it's not all sunshine and superchargers. BYD still relies heavily on China, and the EV price wars are brutal. Profit margins remain thin, and the brand isn't yet as powerful overseas as Tesla's. Add a touch of geopolitics, and you've got a few speed bumps on this highway to global dominance. I'm a shareholder of BYD, but reinforced carefully because of the current tariffs war between US and China. The company represents the industrial side of the green revolution. Not just sleek cars, but the entire energy ecosystem. Sure, the road is bumpy, but BYD has a lot of potential to reach its goals. It's not a meme stock. It's a machine, building the future of mobility, piece by piece. For me, it's a high voltage, Long-term bet, one that could keep charging portfolios for years. This is not financial advice. Always do your own research before investing. Thanks for watching. And if you enjoyed this analysis, hit that like button, share the video, and subscribe to InvestiChan for more weekly stock breakdowns. Comment below which company you'd like me to analyze next.